Hello, fellow traders, and Merry Christmas, Happy Holidays, and almost a very Happy New Year to all of you. It feels like forever since I have been here connecting with you, and honestly, I've really missed it. As I wrote in the community post, I've had a journey the past couple of years. I think, like everybody, this life, this world has been keeping us all on our toes, and I've had a journey balancing career aspirations and really just spending time with family and friends, really, persevering with my obligations at home. And it really just hasn't left me a lot of time to dedicate to this journey of mine as well, this streaming and learning journey in the area of investing and part-time trading in order to, supplement income and create a financial freedom for all of us in the future. So I'm really excited to get restarted. My posts may not be as frequent as before, but I will start somewhere. And I think today what I'd love to get started with is really just an overview of how the year has gone and my thoughts into 2024 and where we're going. We'll also look at, of course, a couple of stocks, but I think initially I wanted to give you guys some food for thought and get your thoughts, honestly, on my analysis of the stock market and where we are today. So let's start with just the S&P 500 index. So I've opened up here a monthly 20-year monthly chart of the S&P 500, and you can see we are in an extremely bullish pattern. While we've had a lot of challenges this year with respect to inflation and, of course, post-COVID, we did have a downturn in 2022, but into 2023, it's just really been on a bull run, with a few drops here and there on the monthly chart. But it really shows you the monthly, kind of the longer term view of how things are going without all of the day-to-day gyrations of the market, for lack of a better term. So a couple things I wanted to point out here as we look through the markets, the broader markets and the broader indexes. We're at the end of the year. This is the last trading day of the year today, and I can see that the S&P 500, while it is reaching for that prior high from 2021, 2020, end of 2020, beginning of 2021, that kind of post-COVID push, that isn't there yet. So we haven't crossed over the all-time high of the market just yet on the S&P 500. But if you look at the other markets, so we'll go ahead and go into, for example, the NASDAQ. Let's just look at the Qs. The Qs have already just surpassed that former high this month. And I believe the Dow Jones Industrial Average in the diamonds anyway has very much surpassed it. So you can see that blue line is a prior high, and we pushed through that this month pretty strongly. You also need to take a look at the small caps, which are kind of an outlier here in the Russell 2000 index. You can see I have some lines here just from prior years and really longer term complex trend lines that can show that is acting as support. So even pre-COVID, this is from 2017, this trend line, and it's really holding up, to be honest. So we're staying above this complex trend line, and it looks like the Russell is just making a comeback if you look at it compared with the rest of the markets. So the last month or two, the Russell has kind of outperformed from the perspective of the last month or two's performance, the other markets. And it'll be interesting to see if it's able to kind of be a makeup trade as we go into 2024. The small caps usually do well in January, so it'll be interesting to see how January pans out for the Russell 2000 index and some of the stocks that are not quite at the valuations of the other market indexes right now, the stocks in the other indexes. So pretty different looking chart. And I wanted to point that out just to say that there is an opportunity potentially in small caps versus the big tech stocks and the bigger, blue chip stocks that have been going up quite a bit this year. So if you think about maybe what that looks like, you look at the technology index, for example, the XLK. It's pretty well overbought at this point. It's at the all-time highs. It's kind of hard to get into that, right? You look at the, for example, like if you go to the blue chips, if you look at a Microsoft, pretty high. Not that it doesn't have room to go or it can't go higher, but it's hard to buy into a stock at the top. If you look at anything, Apple, some of the tech stocks, pretty high. So there's some opportunities in maybe the small cap sector that we'll have to look into going into January. And I'll be doing some research on that and sharing some small cap stocks ideas on my next video. That'll kind of be my next video, will be small cap ideas. But if you look at the banking index, which is, of course, in the Russell 2000, and excuse all the lines here, again, another opportunity perhaps as we go into the new year, as rates start coming down and as the inflation is coming down as well. The Fed, as you all know, have really indicated that they won't be raising rates anymore. And I think the expectations are that they'll be cutting rates soon as we go into 2024. And it's really interesting because if you look at, and I'm just going to pull a chart down here for you. If you look at the Bureau of Labor Statistics, the U.S. Bureau of Labor Statistics chart on consumer price index, which is kind of a gauge of inflation, you can see it's coming down quite a bit. This is kind of the combination of all items. So you can break it down into all of these different categories as well. But this is just a 12-month percentage change in the CPI, which is kind of the primary indicator of inflation. And as we all know, it was just on a steep incline and has since, this year kind of come down slowly and is now at a more reasonable level than before. So this has driven that move, I think, by the Fed, in addition to some of the other data that they use to potentially cut rates. We don't know for sure, but that's what's being indicated and being predicted. So, but I also want to share with you, some of the, even though you can see, the inflation data coming down, the actual prices of items, if you look at food, commodities, in general, mostly are day-to-day things that we have to be mindful of, something like milk or beef, or even chicken. If you look at bread, these are kind of like, I'm not going to include eggs because we all know that eggs went a little crazy this year and have come down hard from their meteoric rise. Let me just show you for fun. You can see eggs have come down quite a bit from their high. But if you look at things like ground chuck or milk or chicken, they're still on an uptrend, or they haven't come down, let's say, as much as that inflation data says that they should be coming down. So while, there may be some decrease in interest rates, a decrease in potentially the Fed funds rates, and maybe some cuts coming, the American consumer is still feeling it in the pocket, the pocketbook. So when we go to the store, we're still spending well more than we used to. And in some cases, 20 to 30 to 50% more if you think about restaurants and things like that. I was actually at the airport in my hometown of Memphis, Tennessee, and just this month, our parking rates increased by 50%. Just in one day, it was one price, and the next day we were up 50%. No incremental change, just a straight increase. So, I mean, there are things that are going to impact the American consumer that are not reflected in that CPI data. So, I wanted to share that with you just to say that, although there is good news on the horizon with from the perspective of inflation and from the perspective of the Fed, there are still some concerns. I don't want to show all the charts, but you can look this up on the same site. The jobs data, the job openings have reduced, even though the unemployment rate isn't necessarily super high. Job openings have reduced. Unemployment's creeping up in many states as well. So it's something to think about how a market can continue to go up in this way, the way it has this year. So with that, this is just kind of my overall thoughts on the markets and the economic situation in a general sense. Another thing I'd like to share, as you can see, I mean, this just shows and kind of validates some of the a bit of a complacency, honestly, in the market is the volatility index. You can see the volatility index is quite low. It's lower than the average, actually, that it has been over the past 20 years, for example. We're all the way down here in the 12s in volatility. And usually it doesn't stay down here that long, as you can see from this chart. So, something to watch for, any kind of increase or inflection in the volatility index, is something to watch out for too. But right now you can see it's really low, which, means it's a good market. It means that the market is not volatile in certain areas and is probably going up. Now, there are a couple things, a couple of stocks I wanted to show that could be, like, if we're thinking, like, if you think that the stock market's going to continue to go up and then tech is going to continue to do well, even though Amazon has, had pretty big V reversal over the past year, it is not at its all-time high like you saw with the XLK or the QQQ or Microsoft or Apple. It still has a ways to go. So something to consider as a potential, like, kind of longer-term swing type trade could be to buy Amazon on some dips or buy leaps on Amazon to see if it does, in that first quarter of the year, if the market continues to go up, if it does make an all-time high, a new all-time high, along with the market as a makeup trade, because it's not there yet. So it's just an idea for if you are under the thought that the market will continue to go up, especially the tech stocks. That's one to consider. Obviously, post-holiday earnings in Amazon are going to be probably strong. It'll be interesting to see, but most people are ordering things online. I know from my friends group, I don't think anybody went to the store this year to buy their Christmas presents. So we all bought our Christmas presents online, and so it's continues to be the primary source of buying gifts online. And I'm really interested to see what their revenue is for the fourth quarter of this year in their January report. So something to look forward to, but that could also push the stock up, right? So something to think about with Amazon. It's not an unheard of situation for it to have, meteoric rises over time. So that's one stock. And another one, if you're thinking about potentially, maybe you feel the other way, right? So if you take a look at something like oil, let's just look at crude oil real quick. And I know I have a lot of drawings on this, so I'm going to excuse myself initially. So this is kind of a broader 20-year chart of crude oil futures. So as you can see, this is kind of the COVID low where it had a really, really, really low bottom and actually went negative. And I do have some lines on the chart that are longer term trends in oil. And if we just zoom in, to the recent past, the past couple of years here, it's been on a downtrend, and it's at risk of breaking kind of a longer term complex trend line here in this purple line. And so crude, with inflation coming down, crude is coming down as well here. And so it has the opportunity, if it breaks this trend line, to potentially go a little further down. So I personally believe that crude has maybe a little bit further lower to go, and then it may stabilize or even reverse based on the economic situation in 2024. Obviously, there's a lot going on in the Middle East with respect to conflict, so you can't really depend on everything as a supply and demand calculation with oil, or an inflation calculation. There are some outliers, so I'm trying to keep these trades relatively short term. So I have been kind of following crude oil for a while, and on this bounce, actually I waited until it started coming down. So I started shorting crude through XLE and USO. So I'm just going to show you XLE first. Again, have lots of lines on it. Let me go ahead and just clear this out. And so crude itself can be, you can look at it from a lot of different ways. Let me just clean this up. And XLE isn't going to give you a perfect, way of looking at crude, but it will follow it to some extent. So I am short XLE through options right now, starting in December. And so I have some first quarter, so March options in crude, in XLE, that are not crude, in XLE, which are of course, energy stocks, the energy ETFs, which contains the energy stocks like Chevron, Exxon, things like that. So as crude oil prices decrease, the thought is this will follow. And so you can see it's not as low as crude has gone. But again, this is another one of those kind of makeup trades, right? So I'm following this closely. I am short with some put options for March 2024. And if it does cross below this kind of monthly, low here, it could accelerate further down to 50, at least the 50 moving average, if not the 200. And so even if you look at this, let's just go to the daily on this. So it is kind of in a pattern of like a channel going down, and it's below like the 200-day moving average now and the 50-day moving average. So this kind of is flat at the moment, but if the 50 crosses through the 200, it's a more strong downtrend, let's say. So that's something to consider as a short. So there's a short option with XLE and a long opportunity with Amazon, potentially, if you feel that there's still some room in tech. Additionally to XLE and crude in general, as far as the narrative of inflation and how we can kind of look at that, I also wanted to share with you another position I'm holding right now, which is gold. And so this is GLD, the ETF, but you can also look at gold futures if you'd like. I like the GLD; it's clean. So I'm in GLD long for some time. I'm not, I hold physical gold, but I also like to buy the ETF during times, that maybe the dollar is weak or things of that nature. So this is a pretty good, just looking at it from a pattern perspective, this is obviously a really long chart, a lengthy chart from a time perspective. Going back to 2011, you can see this start of a kind of cup and handle pattern. If I can draw on this chart, I can show you. I don't know that this has actually just a drawing feature, but so this cup and handle pattern, we're still kind of in the handle, right? So if you think about it, it's just kind of pushing out of this handle here with a little bit higher volume than it. So, with the cup and handle, usually the cup part has lower volume, and you can kind of see the volume is a little bit lower down here. And we'll see how this volume ends up if it ends up increasing as this pushes out, I mean, that's a good sign. So obviously gold has been going up for a little while here. And so I would say as the dollar, so if we look at the Dixie, as the dollar kind of continues to weaken, it's a good opportunity in gold as well. Isn't the only thing, obviously, that impacts gold, but it's one of them. And I think there's a correlation at present, if you look at this, between gold and the U.S. dollar going down. So if the U.S. dollar continues its downtrend, I think you're safe in a long gold position. I'm also in silver, so just to share that as well. And this is actually one that I think is a good makeup trade. Silver usually moves in a more volatile way than gold. This is a monthly chart, of course, so a lot to be considered. You can see there's a lot of volatility in silver over time. But again, this is kind of a downtrend. If you look at this on the monthly, there's a little bit of a trend happening here. So if it were to push through this trend line, there could be an opportunity for a bit of a makeup trade in silver to catch up with gold, which is why I think it's a good option at present as well. So silver, gold, XLE, silver and gold long, XLE short, and potentially small caps long, depending on what they look like in January, are kind of my first. This is like what I'm going into 2024 with. I'm not actually trading the tech stocks at present. I think they're overbought. The only one I'm really looking at is that Amazon for a short-term kind of first quarter trade because of the fourth quarter, kind of Christmas rally or the Santa Claus kind of rally that Amazon probably will take part in. It's not really a Santa Claus rally. It's more of like a Christmas revenue bump. So I will stop there because it's been about 20 minutes. Try to keep my videos a little bit shorter so that they're easily digestible. But I would love to hear from you and your thoughts on kind of my analysis. I mean, this journey is for me to learn as well as to teach what I believe based on my own research and my own analysis. But I'd love to hear from you what you think. Happy to take a look at any stocks you guys have thoughts about. I love to do technical analysis. I haven't shown that in this video, but I do a lot of technical analysis for swing trading, especially. And would love to take a look at any stocks you're thinking about. So comment below. Let me know what you're thinking about the market, how you think it's going to be doing in 2024, and if there's anything you'd like me to focus on as we move into the first quarter of 2024. Otherwise, until next time, I'm Ronnie, and this is Trading with Ronnie. Take care, and Happy New Year.